Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the forex markets. So actually the situation hasn't changed too much here. It's actually, if you take a look even on the high time frames on the weekly, for example, there's mostly everything stands in the same area. And on the daily chart, we mostly could see the same picture that we already have discussed. So despite that, we've got a lot of releases, different data had been released in the last two sessions. Price mostly stands in the same area. On Friday, we almost have got the inside session. So here was some spike during the payroll report, but then and just return right back down. So on the daily chart, we are not changing anything. So for us, the primary area to watch is 112, 112.50. Because if something interesting will appear on the market for trading, it should appear in this area. This is daily oversold. Weekly daily fib level, so this level is also weekly one. It's important. And as I already explained on Friday, this is also past EUR peaks around 112. So you could see this one, and here's one as well. So this is important support cluster, and it could generate lots of attractive setups for trading on the long side on the intraday charts in the nearest time, just because of the scale. So this scale of this area is rather high, so this is daily, weekly, and this will be more than enough to consider some bullish positions around it if something interesting will be formed. So for daily traders and those who trade here, nothing has changed. We're just sitting in the hands and watching for touching of this level. Then we drop our time frame to intraday and start watching for patterns. That's the major strategy for trading with this stop. Now about the intraday trading, those of you who would like to take part in the possible action to the downside. First of all, we are not considering taking new longs position by far. By the two reasons. First is a nominal context that we have as bearish. So we have bearish trend. We do not have market that oversold. We do not have market yet on the fib support. So theoretically, it could keep going lower. On the 4-hour time frame chart, we have this pattern. Friday's performance confirms the idea that probably we will not get any new right arm here over this hand-shorts market. Probably could keep going lower. And the 4-hour time frame chart shows the target is around 1170. This is the OP based on this, let's call it head and shoulders pattern, but it's not quite hand shoulders. So probably to make it hand shoulders, we need to do this one. Anyway, this ABCD pattern, but personally I wouldn't consider taking any targets below 112 just because of the oversold area. So for A point, I would use here not the absolute top, but the point where the downside action actually started, this one. In this case, you get precisely and very comfortable OP around 112. So that's the reason why I prefer to use tighter standing targets. For position closing, if you already have shorts, this will be some conservative approach, but it's increased chances and probability of the success in this case. Finally, let's take a look on the intraday charts. On the hourly chart, that is what has happened with our hand shoulders pattern on Friday. At first glance, it's difficult to recognize it, but just because of the really fast shoulder. So this was really fast action. So you need to drop even to the maybe 15-minute chart to see it better. Here's was really fast shoulder, this pattern that we were considering. And market has accelerated precisely to predefined confidence resistance that we have mentioned. So this, well, proper performance, although it was really fast, and I'm not sure that everybody was able to take part with this. But anyway, the level that we have specified for a short entry worked perfect. So market has reached the confluence and collapsed precisely for this level. Now, actually, we have two options. Those of you who already have short position with this, nothing to do. So just sit on the hands, enjoy the rally, or better to say, enjoy the collapse, and just control your risk and watch for further market action. If you still consider taking the new short positions, you are searching chances. All that you need to do is just watch for this more stressing downside action. Keep an eye on Monday performance. If market will start showing some pullback, some retracement, you could try to use it. In this case, your stop has to be above this area, because intraday picture will change. In this case, if market will break it up, which should not happen if market is still bearish and bears are controlling the situation. So you do not need to risk too much, and that will be more than enough for stop placement in the current situation. Besides, we're considering relatively near standing targets, and this will be too much risk. Even right now, it seems a bit too much risk, because market right now is 113, placing stop above 113.85. It's already 85 pips. That's why I call for the pullback. So if it will happen, then you could try it. Otherwise, your risk reward will be 1-to-1, which will not very attractive. So in current point to sell, it's not a good idea. So that and towards what we could keep an eye on the euro currency on Monday. So until market will not reach the 112 area, or by some reasons intraday context will be broken, for instance, market somehow by some reasons will accelerate above this area, we are not considering any new long position. So we just keep going with the context that we have, scenario that we have, and see what will happen. Finally, just as a small add-on, right, let's recall what we have from the Great British Pound, because currently it's also very interesting. And if you do not like the overall picture on a euro, you could also consider some stops that stands on the Great British Pound. So on Thursday, we said that we have the confirmation of the double repo pattern. Now you can see that based on the performance, we said it would be better if market start forming some kind of the tight consolidation in the shape of the pennant or flag, as we mentioned this on Friday. And we call you, if you would like to take the short, keep an eye on some intraday pullbacks here, try and take the position. That's a validation point. So currently you can see that Great British Pound performs really perfect with this double repo pattern, and once it starts moving to the target, it easily could reach actually its minimum target around 130.50. So if you like this setup more than picture that you have on the euro currency, I see no problems trying to this trading setup as well. So that's actually most interesting stuff that we have currently on euro, on Great British Pound. So let's see what will happen on Monday.